of Avendus Capital Alternate Strategies joins us now to give us his view not only on the market but a lot of the news flow that has just trickled in. Andrew, hi, good morning. I can't help but ask you about Infosys first up. Given the kind of sustainable weakness we've seen in the growth over the last many quarters, you think Infosys has now fallen off the radar of long-term investors and it's no longer going to be even a market performer that it used to be at one point in time?
Well, you can certainly take it off the kind of growth label. It's not a growth stock anymore, and I think that's still what the market's hoping for, and it's just not going to get it going forward. I mean, the whole model for them has broken, and that's what you're seeing in terms of the earnings. And if you throw in the rupee headwind for them, then the stock could easily fall 10% before it's even worth looking at. You can talk about share buybacks and dividends, but it's going to, basically, how do I value? It's not a growth stock anymore, so it's more of like a utility throwing off some cash. But unless they can really kind of reshape themselves, of which they've spent many years now trying to do that, and it's not worked. You're going to have a stock which is not quite that kind of Nokia moment, but you've got a sector which has got to find a new growth angle, and they're just not doing it. They're sitting on far too much cash. They're not making any acquisitions. They're not reinventing themselves, and they have to do it. So the figures, we can look at them and we can analyze them, but basically the whole industry is on a downturn, and there's nothing they can do about it right at this moment.
Yep, take your point. It was the Shahrukh Khan of the market, and quite clearly the King Khan's days are over, as seems to be Infosys at this point in time. But who is the new Shahrukh? Who is the new Ranveer Singh or the Ranbir Kapoor of the market, Andrew? Which is the iconic stock, really?
Across the IT sector or across the whole,
across the market,
whole market?
For the Nifty itself.
Yeah, well, at the end, there's obviously going to be a number of new contenders for that. I think it's going to probably come from different areas actually going forward, as the market evolves. And I think, whilst I'm a little bit more negative on GST going forward, I think it is a game changer for a lot of manufacturing and industrial companies, and I think we're going to get some real winners from there. And so, when I think about, and I've been very negative on a kind of Hindustan Unilever because of the PE, but when I think about that kind of stock and what it could, how this could be a game changer for them, it's significant. Plus, let me throw in that, globally, the company is now going to have to restructure itself, otherwise another Kraft is going to come after them and try and take them over. So there's a lot of good news, I think, to come from Hindustan Unilever over the next 1 year. So that's the kind of stock which I'm kind of thinking of could be the next contender for your list of superstars.
Okay, that's interesting. I want to flesh that theme out a bit more, but what about some of the ailing superstars, the metal space? We are now starting to see some money being taken off the table there. Is this a good time to be sort of putting in more money into this space, or do you think that the story is completely done here?
Well, there's a couple of things there. In the very short term, you've seen that the China housing market actually has come off quite significantly, and steel prices in China now are kind of at the kind of levels of Indian steel prices. So you could see some imports now from China, even with the barriers that we have in terms of import duties. So, the recent increases you've seen by the metal companies in India, I think will have to be reversed because I think China, you've seen the imports and export figures today, which again is a bit lukewarm. I think they're going to start having to export their way out of it, and I think that means dumping again.
Oh, okay. Yeah, we'll have to watch out for that. At the moment, all metal stocks are off. BHP, Billiton, Rio Tinto, all of them have had a bad last 24 hours. But Andrew, I don't know, do you still run one of those long short funds of yours in your new avatar at Avendus? And if you are, then where would you be short and where would you be long?
Yes, we actually successfully launched our fund last month, Lata, and we're obviously still on raising some more money. But at the moment, we're about 70% hedged because we feel that markets, not just in India, but globally, are overstretched. And I would say a few things now about the US market and the so-called Trump rally, which I've never believed in because he inherited a strong economy. He's talking the dollar down. He's also saying that the tax reforms that he's trying to bring in will take longer than he expected. And the infrastructure spending of $1 trillion, which he's never put a timetable to, seem to have gone into the kind of the backwaters in terms of when that's going to happen. So, if you look at the dollar and you look at the 10-year bond yield, they're virtually where they were before Trump came in. So it's only the markets that are holding up, and I think the market's losing its patience with this reflation trade that Trump is said he's going to deliver. I think he will deliver it, but I don't think it's going to be the timescale the market's expecting. So, we could see a global sell-off, very soon, and obviously that will bring our markets down because the earnings season, and we just started with Infosys, I know, is not going to be great, and GST, as I've maintained for some time now, it's going to be disruptive to the economy for a minimum 3 months, if not 6.
So are we looking at banks as a big casualty when the markets do sell off? Because there seems to be no resolution to the NPA issue just yet. And this time around as well, the earnings are expected to be lackluster.
Yeah, I don't think it's just the banks. I think it's across the board. I don't think, if you look at the data coming out, and again, I don't follow the IIP data because it's too volatile, but, every company we speak to, has not seen any V-shaped recovery from demonetization. It's very slow. And, just as recovery may be picking up, we'll have GST being implemented. So, I think it's going to be a poor year for earnings. I don't think the 20% growth was ever going to be met anyway, and we're already down to 15% earnings growth by most brokers. I suspect that's going to get down to 10. So, maybe we can state these kind of valuations, Latta, don't get me wrong, because of global liquidity, but global liquidity always has something which will pierce that bubble, and it's usually not something which is very positive. It could be North Korea, it could be Syria. You don't know what it's going to be, but it's certainly the past. I would say the past month has been, bad news is good news and good news is great news, and I think we're going to move away from that kind of stance very soon.
Okay, so you have a bad feeling on the markets. Where would you take off money? You said that you're 70% hedged. Which are the places where you're going to take off? Would it be, these metal names? Would it be bank names?
I think where we've been putting our hedges has been more, you're right, on the metal side, certainly the technology side and pharma, because, both those sectors, one, get hurt by the rising dollar, but also the headwinds against those sectors, the pharma and IT, are so heavily geared to the downside that they make the natural hedge for you, in terms of where the markets are. Banks, we haven't really taken any action yet, partly because the momentum's there. There's just so much talk about restructuring, bad banks, NPLs, restructuring, that it's keeping the momentum there. But once we finally see what the finance minister does, then we'll take a better course of action, or have a better course of action to take. But my feeling is that PSU banks have certainly outrun their kind of the expectations that we had, and that's where probably the most gains will be when markets do fall and the banking sector falls.
Okay, well, Infosys is the stock of the moment now, 2.5% lower, and the volumes are really picking up on that stock. In fact, you already have about 40 lakh shares, more than 40 lakh shares traded on the downside. As they say, just because the stock is trading at a historic low, it does not mean it cannot fall further. So, the numbers are weak this time around, and there's nothing to rejoice at all as far as growth is concerned. No visibility in terms of growth. Andrew, you spoke about Infosys and how, particularly for this company, the business model may have been broken. But what about the sector as a whole? It just gives rise to a lot of uncertainty with respect to H-1B visas and what the, incremental negatives could be. Is this a sector that you would avoid entirely?
I've been avoiding it for the last 2.5 years, but I would think that I would continue to avoid it. You know, listen, I've said before, and I'll say it again, but you know, I think of these stocks now as a utility, and if you're a utility, you either pay me huge amounts of dividends, i.e. the yield is worth me holding the stock, or you do a buyback, or both. And I think, you know, that's where we are. I can't think of you as a growth stock anymore. Those days are gone.
Yeah. Fair point, Andrew. Finally, you know, where would you hide? NBFCs, any of the mid caps? If you have to invest, where would you hide? And you're 70% hedged. Where are you not hedged?
So we're in quite a lot of the consumer stocks because that's a good place to hide. I've already mentioned one stock to you, which you know, I think could be a big beneficiary of that. And also the shipping sector looks a little bit more interesting. If you look at the Baltic Dry Index, it's reaching all-time highs. So there's obviously a lot of movement, you know, in terms of exports and imports trades, and that's what's keeping the Baltic Dry Index very high, so the shipping sector is also looking quite good.
Okay, Andrew, thank you for stopping by, and you have a great weekend. It's the long weekend coming up, so I'm sure you have big plans lined up. We'll see you again later on. Thanks so much for joining us. That's the word coming in from Andrew Holland, talking mostly about individual stocks. HUL, by the way, he believes could be the next market leader.